Most financial advice and strategy out there are aimed at massive construction companies. But if you're a subcontractor doing less than $30 million revenue annually, it's incredibly important to understand how general accounting software affects your business decisions more than anything else. The problem is most subcontractor owners don't know how settling for general accounting software affects their bottom line, so they end up wasting profit, hiring consultants, and buying software that doesn't fix anything. That's why in this video, I'm going to show you 3 easy to understand construction accounting specific reports so you can use data to identify cost issues before it wastes your profit. Follow this process and your construction company will stop hemorrhaging money on projects, leading to more growth and less stress. One great option I'm talking about is also today's sponsor. Control Core is a full construction accounting software solution. It's cloud-based and has options from expense reporting and sending and receiving payments to project reporting and extremely reasonable bookkeeping services. They're a one-stop resource for any construction accounting need. The founders all worked in the construction industry for general contractors in finance. They saw the problems contractors have and decided to create the solution. Mention this video and you'll get 50% off your first year of Control Core software and 10% off bookkeeping services. I personally work with them testing software updates and onboarding clients as a construction CFO, so I know it works. But with that, let's get into it. To most construction business owners, accounting is just invoicing and collecting payments to report for the IRS, so they use the cheapest accounting software they're familiar with. Of course, collecting and tracking payment is essential, but you can do that on a spreadsheet. What accounting software should actually do is track your costs into buckets and provide financial reports using the data. Let me show you. A company overview is shown on a WIP report or a bonding report. This is a report that shows your work in progress. It's a snapshot you can pull at any specific point in time to get a full picture of all projects. You'll get their budget, what's been spent, what's left on the budget, billing status, and a few other major things. To start, here's a WIP report from a general accounting software. As a business owner that doesn't spend a lot of time looking at these financials, this seems adequate for a CPA. But the problem is that this information is months behind and almost always wrong. And here's why. By the time you realize the actual cost will exceed estimated costs, you can't adjust your strategy. If you could break down the cost individually the way you estimated it and track expenses monthly, you could adjust your strategy for each portion of the project before there's a problem. Let's assume you have an estimate for a new project running 1,000 feet of pipe underground. In your estimate, you took into account the cost of the material and the labor to build that portion of the project. Using this basic WIP report, you see the project total estimate and the actual cost to date. That often looks like it's on track. It will look like 20% of the estimate spent and 20% of the project completed. But it's deceiving because you won't see that the labor for the last 2 weeks hasn't been processed yet, or that the pipe you bought hasn't been paid, so it's not actually showing as cost to date. Really, you've spent 30% of your total estimated budget, and you've already lost 10% in the first phase, but have that bad financial report so you don't know it. In reality, most construction companies overpay in taxes every year because their CPA uses bad data from the WIP report to estimate their taxes. This is a WIP report from a construction accounting software. We're going to focus on the example of Williams Post Office to show what to look at, and by the end of this example, you'll see how this project appears successful on the WIP report, but is hemorrhaging money. Like any owner, your eyes are immediately drawn to the estimated profit of $85,067, which is the same as the budget minus the cost to date. This report also shows we've even billed $88,177.07 more than we've spent to date on this project. There's a cost to complete column that wasn't on the other report, which when you hear financial people talking about forecasting, this is the result from forecasting. It's updated monthly to show how much cost the project is projected to take to complete. This project looks like a home run, just like it would in general accounting software. So what's the difference? We can see what makes each of those numbers on the WIP report. This is a job cost summary for the project. A job cost summary is a report that shows each line item that adds up to the current budget, current cost to date, and the projected cost to complete. We can see every line item with a budget and compare it to the cost to date. This example is of a general contractor, but since labor efficiency is the real issue in construction, it's even more powerful for a subcontractor to track estimated hours against actual hours by phase. There's a spot for permits, concrete, rough framing, and any other task we need to track. As a subcontractor, you can track as granular as you want. My clients track labor for projects by 4 to 8 week long activities like phase A rough-in, floor 2 trim, or duct bank A to B, for example. Taking the WIP report numbers at face value leads us to make decisions to buy new tools, a new piece of equipment, or take an owner's draw, thinking there's money for it. But the data isn't right, and the only way you'd see it is through this report. Look at code 3000 for concrete. There's a budget of $3,381 with no approved changes, but $10,680 has been spent on concrete material. A WIP report adds together the new budget column for current budget and adds the cost to date column for the current cost to date on the project. But the budget line is missing $7,299. Once it's updated, there isn't going to be an estimated profit of $85,067. It would be $77,768. Look at code 10,300 for fireplaces and stoves. There wasn't money estimated for a fireplace or stove, but $4,180 has been spent on it already. Was there a miss on the estimate? Was there a change order that hasn't been received yet? Did we buy something we shouldn't have? Business owners always have the thought of, did I bid high enough when they win a job? Seeing this data just makes your mind worry so much more, since this is just an example of 2 line items out of 70. But without a report like this, until the final invoices are paid, no one will actually be sure. Off 2 lines alone, estimated profit was more than 13% wrong and went from $85,067 to $73,588. If you knew your WIP report was more than 13% wrong on projected profit per project, would you trust making a decision off of it? Would you pay your taxes off of it? Of course not. It actually gets worse. There are other reports to show additional costs planned that aren't pulled onto a WIP report. This is a committed cost report. This shows all outstanding purchase orders sent and agreed to pay on a project. Committed costs add up to project the cost to complete a project. A current budget minus cost to date and committed costs is the projected remaining budget for that phase of the project. This report shows if there's an outstanding balance, if a scope of work has been secured to avoid cost escalation, and where there are savings on completed or fully secured scope of work. Look at code 2000 for site work. There is $21,750 committed in a purchase order that hasn't moved to cost to date, and the entirety of the estimated budget has already been spent. The purpose of this report is to understand and adjust the plan. So questions like, was there a notice to proceed in writing for a change order adding scope? Was there a scope gap in the estimate that we're responsible for? Or was the entire scope paid for but not applied to the PO separately, leaving a balance? If there are outstanding costs not accrued, a WIP report won't show it. Look at code 9000 for finishes. $9,309 was spent on finishes that wasn't budgeted. Looking down two codes to 9,250, the exact same dollar amount was budgeted for gypsum board and committed in a PO, but not spent. This gives an opportunity to see, was the invoice coded wrong, or is there a budget bust? It's really important bookkeepers and accounting teams are on the same page as the project team. Otherwise, mistakes like this come up often. Even though it could be a 2-digit code difference and seem insignificant, it changes the numbers on the WIP report, giving a false sense of security when there are issues that need to be solved. This report helps forecast cash flow, but only if bookkeeping is accurate. The last report is an over-under billing report. There are thousands of customer reports for pretty much anything you want to track, but these three show most of the project issues. The over-under billing report points towards how well a project is performing and how well that progress is being billed. In this report, a negative number in the over-under billing column represents billing more than has been spent, and a positive number is spending more than has been billed. This report alone can tell you if cash flow problems stem from billing. Look at Project 222 Big Redwood Tree Hotel. $192,339.88 has been spent, which is 11% of the budget at that point in time when this report was pulled. At 11% of the contract total, we should have billed $221,753. Billing shouldn't be what the cost to date is for the project. Billing should be the project cost to date plus overhead and profit at a minimum. That's how every construction company recognizes overhead and profit through monthly billing. If a company waits until the final bill of a project to bill overhead and profit, there has been no money to pay for things like the office building, the accounting staff, IT, or any other overhead. This report shows this project hasn't billed anything. The company has already paid at least $192,000 in job costs without overhead and profit loss and hasn't even started the clock to collect that money. If this company has a cash flow problem, it's because they've forced themselves to dip into their working capital options, paying interest because they haven't even attempted to get paid for their own bills. Owners and clients let subcontractors do this all the time because the owner is saving money on interest and the client looks good keeping monthly costs down. So how do you get accurate reports that help your company identify project issues earlier? Consistent data entry into construction accounting software. Have a process for what costs go to what codes and who is in charge of doing them. A good CFO creates replicable processes for companies so they have reliable data. Project managers start by entering the budget from estimating, writing purchase orders to commit costs as soon as practical, and approve invoices weekly to whether the project has received the material and the costs match the quote. And accounting teams and bookkeepers have clear rules to what costs go into what buckets if there isn't a purchase order for the invoice. A typical example I see is fuel. Expensing fuel could be a job-specific cost, or it could be an overhead cost. If one member of accounting does it one way and another does it the opposite way, project data and overhead data won't be accurate. You can imagine how lost receipts and unexpected credit card purchases from Home Depot can derail an entire WIP report. The goal is just to be as accurate as possible. 100% accuracy is completely unachievable because there's always going to be a new cost that might not be shown yet. So think of it like this. Using a general accounting software for construction is 90% margin for error. Construction accounting software without processes has a 50% margin for error. But construction accounting software with processes is a 10% margin for error. Follow this process, and next year, your projects won't be hemorrhaging money. You will be able to depend on your WIP report, plan your profits, focus on problem projects, and have less cash flow issues. I want to hear from you. Which of these reports do you wish you had sooner, or is there something else you wish you knew about your business?